Ladies and gentlemen of the crypto space, we're live on a Tuesday, July 12th at 12:19 p.m. Schedule has become a bit erratic lately. The market's erratic, so obviously I don't always have something to talk about. Depending on things going on, it may be best for me to wait, which is yesterday. And today I have something on my mind. It's something we always think about. But I have enough of an idea that I'm thinking to have a conversation about it. This is something that is the evolution of all this time we've spent talking together over the last couple of years, and it's how to think about capital. How do we manage our capital? And I was talking this morning, Dan's on, about rules, and all heard this before with folks that have said have rules, stick to them, and usually day traders say that type of shit, but that's something that I think a lot about, and we've got a lot of rules in the rational Discord and on our streams over the years. Is don't go all in, don't spread too thin, and hold on, let me flip to the main screen, and here's some of the rules. It's not really. Uh, it's not the most recent rules, actually. These are good rules. These are historic rules. But some things are not just single sentence. They're more of discussions about how to see the state of the markets and the directionality of things. And that's kind of where my train of thought is heading. Some of the things, well, we'll get into like yield and interest and how to think of income, but we've talked about stuff like that with regard to the pizza shop. And one other thing is, when is the top? When is the bottom? What do you do at the top? What do you do at the bottom? If it's going to go down in price more, why are you buying now? If it's going to go up in price, why haven't you sold? If you expect it to go down in price, shouldn't you wait so that you could get a larger position? What if it keeps going down? And then you have uh, two narratives that drive me nuts a little bit, but they're valid. And it's like bond maximalists and cash maximalists, and I love talking with such persons, and I agree with them in regards we should not discount the power of the dollar and the meaningfulness of it and its use case, because we could use it to buy pretty much everything and anything. Everyone on this planet accepts it to be like, oh, okay, I'll give you that for how many dollars? And that means we should probably have dollars. So the question becomes, how much dollars? And obviously, if you just have dollars, you're pretty much going nowhere slow. Actually, with this CPI, this inflation rate, you're going pretty much nowhere fast. So we know we need to have assets. We know that if we wait to buy them at a cheaper price, we could get more of those assets, which means we could have more of a position with recurring revenue. We know that also those assets that produce recurring revenue get exuberant. We're looking at the curve chart here. And like if you had something at $6 and you're able to sell it at $6 and then it goes to $1, you're able to buy significantly more of it. We know that capital gains produces multiples more than recurring revenue. So capital gains, let's start there. It's not really, for my mindset, and I would imagine most people would share the type of sentiment, it's not really a sustainable way to interact with markets. It's not like you could step away from the computer thinking of the burden to manage a position that's a capital gains play. Traders, veteran, experienced traders will say, sure, you do options and stops and limits, and you're able to manage long and short positions, obviously neglecting leverage for the time being. And that introduces characteristics to positions that make them more sustainable or at least manageable. But that's not long term enough for me. My mind thinks more so like Buffett. And he always says, you're not owning a stock, you're owning a company. So I think the same way, more so nowadays, about certain crypto assets, which is in some regards contrarian. A lot of people aren't quite there yet, but that's where my mind is. These assets produce income, and I've defined this income as salary, and I spend it. I use it on debit cards. In fact, I have sold all of my assets to a trust fund, which I'm the trustee of, and I use all of the money, the proceeds, to pay for all of my children's needs. So I've isolated this capital. I have a defined weekly, daily, monthly use case for that capital. There's tax advantages. That's besides the point. I've talked about the trust fund. Maybe I'll circle back around to it in later episodes. But it's sustainable in that regard, which means the yield that my assets produce is income for a purpose, which also means I can't spend all of the yield in a compounding fashion. I need to carve out the income and treat it as income, which means I can't take assets that are yielded to me and keep them as those assets. I need to convert them to cash instantaneously. Think of them as a salary from a business or a paycheck from a job at the end of the week. And right now, that is very sustainable the way I think about it. It helps me manage all of these complexities that we started the stream with. I'm not thinking about when to buy, when to sell. I get a return, a weekly payment, and I treat it as cash just as you would a paycheck from working. So instead of working, going to a job, putting in hours or whatever, I click a button, I get a paycheck. Let's say it's $1,000. What would you do with a paycheck with $1,000? Oh, save 20% of it, invest the rest, save up for an item. So that is how I think about these weekly paychecks. You can't keep it in the asset because that's compounding. That's not a paycheck. You're just spending all of your money. So now I know it's difficult with a smaller portfolio because your persons are so focused on growth and trying to grow the portfolio. So maybe a lot of what I talk about is not best suited for smaller portfolios that are more growth oriented and persons that are overwhelmed with the urge and the need to grow their capital. And this is much more content that's designed around capital management. Um, so in that regard, I apologize, as maybe it's not the best or most useful content. But bear in mind, everything that I talk about is always scalable to any size portfolio depending on um, expectations and needs. For instance, if I'm pulling in $5,000 a week, someone else could be pulling in $1,000 a week, and someone else could be pulling in $250 a week and be very content with an extra $250 a week. That's very meaningful. That's a big thing. I mean, look at dividend investors with traditional equities. I think on the last episode I showed one of my favorites. Um, it's a smaller number, and it requires much more capital to make that kind of return with 2, 3, 4% returns compared to what we're pulling in with our favorite and crypto enterprise between Curve, Convex, Pitch with what Frax is coming up with, and the Balancer Aura relationship. They're very productive enterprises that pay us a fair amount of money. So the point is that we can achieve much more to our goal in the crypto space as what dividend investors in the equity space are accustomed to. So, so where are we? We have a capacity to be productive. We need to isolate our income and structure it in a sustainable way. And we don't diminish, don't get frustrated if you do pursue this type of sustainable approach to capital management rather than pursuing just capital gains. Try and get over the emotions associated with not earning as much as you want. We need to learn to be a little bit humble. For instance, a great example of that is something that I've experienced lately. During the height of the bull market, my portfolio was multiples the size of what it is. My claim buttons were multiples the size of what they are. So maybe this is a much more recent realization for myself. Let's say my weekly income is down 70%, 80%. probably in the last 2 months during this bearishness of the cycle, I have taught myself to be overwhelmingly content with the revenue because I compare it to my salary from my work. And maybe your income from your claim buttons are multiples of your salary, or maybe it's 10, 15, 20% of your salary. But that means let's say it's 10% of your salary or 20% of your salary, your assets that you're saving and accumulating and growing and that will appreciate in the coming decade are producing a good portion of your entire income. And that's meaningful. That's very meaningful. So I guess the whole point I'm trying to make there is to be humble and to be appreciative of what we have. What has been created is not trivial. It's meaningful. 10, 15, 20% of your salary, extra income, doesn't change everything significantly, but that's equivalent to a 10, 15, 20% raise. In traditional business and traditional enterprise, if you get a 3, 4, 5, 6% raise, you'd be like, whoa! At least I remember that when I was working at larger corporations, they wouldn't throw around 6, 7, 8, 9, 10% raises. So that's a big deal. It's just something to be appreciative of. And then you grow from there and you pursue more and more revenue. This is a lot of what I talk about is traditional dividend investor ideology, except we're able to achieve much greater productivity and returns with these crypto enterprises, predominantly because we're seeing something that most do not. We talk about these systems like most do not. We don't discount or invalidate these systems as being actual enterprise. And that's something I very much appreciate. You know, I follow many people on Twitter, many people that just love cash and love bonds, and I appreciate that narrative, but there's no way to argue that this is an enterprise. There's no way to argue that the accumulation of transaction fees and the distribution of them in a disintermediated fashion is not a novel enterprise, because even a REIT isn't fully disintermediated. They have employees and staff and overhead and office space and real estate. It just doesn't work like that with a traditional enterprise. But when you're dealing with software, you're cutting out everything. You're gutting the enterprise. And we're talking about a very base level of enterprise that has emerged in crypto thus far. You can imagine the emergence of an entire system, but this is the base. This is the beginning, meaning talking about financials, just financial primitives and just stable coins. But in the future, it will be very different. There will be many more products, not just financial primitives. And all of those financial products will need liquidity and routing and conversion and swaps and Forex base level infrastructure. So that's what's been created. It's not the pinnacle. This isn't the epitome or the very definition of what these systems are going to be. This is the most fundamental of this ecosystem. This is the base layer that we're toying around with. So I hope that's a decent monologue about what I've been thinking about. We need to be sustainable, or at least I encourage persons to be more sustainable than less. Don't spend all your money. Think of your claim buttons as income, and obviously pursue liquidation the second you get them. That's a rule. Defining rules will help us be more sustainable. It's not about opinion. It's not about, if I get this claim and it goes up in value, I'm going to have more money to sell it to. That's speculation. When you got that yield and if you sell it, that's your damn paycheck. Now you could transfer some of that to a debit card and buy some baby formula. And that's meaningful, because otherwise you would have had to spend money that you had to make putting in time and work and hours into labor. And that's profound. It really is. The fact that we could own enterprise and the enterprise works for us. To varying degrees, obviously. Some portfolios are smaller, so it works for us less, but a larger portfolio works for you more. So your goal is to get to the larger portfolio so it really puts in the work. So to do that, you can do capital gains plays, but now we're increasing the complexity. Thus, we're decreasing the sustainability, and more work, time, and effort is required to hopefully sustainably engage with capital gains type of interactions with these markets. I hope that helps. Enough time to waste. Yee! Dan's in the house. Good afternoon, Big Whale. Let's go. Killis is here. Garrow. Good. Let's go, Noah. Greetings from North Macedonia, baby. In the house. It's a pleasure. Staff, Tapsy, Mr. Nobody, Maker. What's your take on the Chinese stock market? Yeah, more interested in the banks not having liquidity to finance withdrawals. The market and the macroeconomic conditions continue to deteriorate all over the place. I've said this and I'll say it again with regard to the crypto space, and I don't really look at the equities markets. I have ancient equities positions, but they're target 2030, so I don't look at them too much. With regard to the crypto space and our primary investments, these are indeed my primary investments. They become that. Historically, they were much smaller. Crypto positions were much smaller than my equities positions, but they become the majority of capital. They've grown into the majority of capital. So, what's important to me, what do I see when I look at charts like this? I don't expect appreciation. I would be nice to see appreciation, but what am I hopeful for? I'm hopeful for not significant further depreciation. I expect hopefully horizontal crab walk price action until this absolute liquidity uh, tightness resolves. Now, to see that, we know the macro conditions that'll tell us when liquidity starts to improve. And we'll see it first and foremost in the crypto space because these are permissionless systems that are global. So it's not like you're investing in a Chinese company or an American company or whatever country. You're investing in an enterprise, a company that has global reach, no infrastructure, no debt, no nothing. This is where the capital is going to flow first because it is the most frictionless place for capital to flow. Last unperverted financial market on the planet. So I hope it doesn't go down. And that's okay because they produce revenue the entire time. I've said many things over the years, and it's like more coin I've said, and I've said principal is volatile, but the revenue is productive. So I've also said, who gives a shit about the principal valuation? But I wouldn't go as far as that because anymore, or maybe ever, because there comes a time where if you can liquidate, you should. Like if you could have liquidated Curve at $3.25, which I did because it was in the form of CVX CRV, that worked out very favorably for myself, and I was able to preserve much more capital than I would have if it was just all VECRV. That does not entail that I favor CVXCRV because of its liquidation capability. In fact, I don't have any CVXCRV anymore. It's all VECRV. It's just about if you have an opportunity to capitalize in such a way, you do it. And there's no rule book in that regard. When the market's tightening and liquidity is drying up, you liquidate whatever you can, which kind of plays into the income we get on a weekly basis. You'll just liquidate it because then at least you have a choice. You can choose to spend it. You can choose to save it. You can choose to buy another asset that produces more revenue in a compounding type of fashion. But you can choose, so you don't ever want to take away your choice. You want more choices, and you want time to make those choices. Hopefully that's a clear thought. What's your take on the Chinese stock market? Yep, you know the deal there. I'd like to see CVX at 50 cents and buy a huge bag. That'd be nice as well. I don't know if think I'm tempted to carve out some more cash. So I recently did a VCRV purchase. And, I think to myself, could I have bought lower? And then I mentioned to you, Dan, this morning, if I buy lower, am I trying to squeeze that little bit more out? Am I being greedy? Because I wanted the position. Why? Not because I could ever sell it. I don't intend to ever sell it. I think of it as a purchase, which is probably wild to many traditional investors. I'm permanently purchasing something, so it doesn't really contribute value to the portfolio. What does that even mean? But why did I buy it? I bought it because I wanted to own an increasingly large percentage of the weekly revenue stream. There's a 20-30% bump in weekly revenue. And that's what I was thinking of. Not even the value, whether it went up or down. Because clearly I do have these complex thoughts. And I'm like, all right, probably it'll go down to 60, 70, 80 cents. But I wanted that weekly revenue. Maybe it was a case of impatience, or maybe it was a case of following the rules. I don't know. I don't know. We could always do better. And next time, maybe I'll extend more patience. Maybe I'll wait a bit more and I'll have a more favorable position. Every experience you have needs to be cumulative and iterative, needs to build on itself to produce better outcomes in the future. Don't ever regret your choices. Don't ever regret the positions you've taken. Just know that they were experiences and you will do better next time. Always remember that. Sporos is in the house. A pleasure. Raul, Joshua. Hey. Assets are down, but have a surge of cash coming in from business revenues. Looking to do 1 to 2% test. These waters of DeFi, as always, can do better. Well said. And that's exactly what has played out with Aura. It's proven quite productive. It was very speculative if you bought at the 50, 60 cent range. But Hidden Hand has shown, look at these, the 75% of transaction fees on balancer pools is being directed towards VL Aura bribes, incentivized voting. And this is going to prove to be very productive. I mean, look, the bribes are coming in, even though I think these are maybe new, or maybe these were last minute. But this is all from transaction fees. So if you could carve out a piece of this, that's quite interesting. I'm not stomaching a larger position at these prices. Right now, it's about to backtest the guppies on the 1 hour. Let's go out to the 4 hour. It's finding support on the 4 hour guppies, so that's promising from an upward trajectory standpoint. Where are we in the daily? It looks like to be a double wick bottom. That's a tweezy bottom. So there's, from a technical standpoint, an indication of potential not down. That's not encouraging enough for myself to take a position. I do have a limit order in at $1.85. What was it on the 4 hour? It puts us in at the previous top, about there. A wick below the previous top, previous high. So that would be interesting. If I get the big, so I think I'm handling Aura much more rationally than I've done other positions in the past, and maybe that'll result in me having a less sizable position, but that's okay. You never want to empty your bank account, so that's where I'm at. I have a fair amount of cash that could last me well through this depreciative cycle if it lasts 2-3 years, and I don't want to. You can't spend it. Sometimes you can't take on more assets, even though it produces revenue. These are very hard choices. Very hard choices. And you could really only measure from a hindsight perspective how well these choices were made in the measure in the coming years. So I like that. I like that statement, Joshua. I think you're on point in that regard. Asun, good morning. Johannes is in the house. Hey, friend. Freedom hacking. Thank you. Hope you're doing well. Have you seen? Oh my God! I need to get to the movies. No, I haven't seen it yet. So no spoilers, boys and girls. I very much look forward to seeing the new Thor. I'll get to it. Killis, I need to hear that today. Thanks, Noah. Yeah, it's hard because we see these bounces, and these are clearly not a dead count, not dead cat bounces where like things are completely rolling over. It's just a bear market, and things are crawling along. We don't have liquidation capitulation and things are not falling like a stone. Um, but the whole financial system, the deal from a macro perspective, punching through 108 on the DXY is basically the euro just completely hitting parity, and it looks horrible. Yen and the euro, Japan and Europe are absolutely in a shit economic situation. And we could easily see capitulative events where there's big bond sell-offs, or we could see a complete liquidity crisis where this gets converted back into traditional risk off and bond yields collapse. There's plenty of room in macroeconomics for extreme volatility, which will present itself as volatility in the crypto space as well. But I don't see significant drawdowns. I mean, whoever would have sold already. I mean, what are we going to push new lower lows on Curve? It's not that I discount it as a possibility. I'm just like, what are you going to do? What are you going to do? I have the position size I want. It'll be bought back. Why? Because the cheaper it gets, the more favorable it is to buy it. Is it going to fail? Why the hell would it fail? There's literally no debt. It's an enterprise that operates completely sustainably. It doesn't require humans, it just works. Whether a human wants it to or not, it exists. If something exists, it's going to be used. And that's my sentiment. The principal will be volatile, the revenue will be austerity or affected by austerity, which means the revenue is going to be volatile. It's bumped up, it's fallen down, but the revenue will be there. The revenue will be greater than zero. And in times of austerity, the revenue will be less. In times of prosperity, the revenue will be more. Do we look forward to the revenue being more? Sure. Do we have to accept the period of austerity? Yes. Should we be angry of the period of austerity? Nah, you should be annoyed by it and frustrated because of the macroeconomic discussions we have. Should we be hopeful that the revenue increases in a period of prosperity? Yes. Is it likely the period of prosperity will return? Yes. Timeline? Unknown. And don't force the damn portfolio. The second you try and force it is when you get hurt the most. If you force a purchase because you really want more revenue, it may hurt. So don't clean out the bank account trying to pile into the largest Aura position. Or the same thing with Curve. And that's really, like Aura is the first thing that catches my fancy since like the solidly complete failure. For one thing very obvious, the Federation. It's the only thing in the crypto space to have created a federation thus far, other than the Curve Federation, and solidly had the biggest opportunity, much bigger opportunity than Curve, and it was completely a complete failure. But that's besides the point, because as you see here, this federation, this cyclical feedback loop of incentives, this will draw in capital to Aura, to VoteLock as VL Aura, which will drive the entire cycle to VE BAO and Aura BAO and all the LPs, because as those assets either stabilize or appreciate in value, the incentives on the LPs stabilize or increase in value, and that will be the flywheel that everyone so commonly talks about. So this is the first federation other than Curve. Now, what's disappointing is that it does the same thing as Curve. Obviously, there's the nuances between the balancer implementation and the Curve implementation, efficiency, so on and so forth, and, the whole conversation there. But it's still just a financial piece of infrastructure facilitating, um, swaps, liquidity, conversion, forex. And, I look forward to products, like a big product that's completely dependent on a Forex market for base level functionality, because this is all we have thus far. The biggest creation, this is by far the biggest creation thus far in DeFi, is the base level capacity to exchange assets without an intermediary, or at least a non human intermediary that has deterministic rules. So, and this is what I always say, or at least very much recently have said, there's few protocols in the crypto space that hit all the check marks, all the check marks of the most important things to have emerged in the crypto space. Very few protocols that are meaningful. Very few protocols with survivability characteristics. Much more than 2016, 2017, but very few compared to the total quantity of protocols that have been created in experimentation over the last 2 years. So the biggest attribute to assess is survivability. If it survives, it's going to be very meaningful in the coming years. All right, we're going to wrap up the stream. Thank you all for joining. Live viewership today. 19 people in the stream left, 12 likes. We can do better. I thank you all for joining. 12:50 p.m. Tuesday, July 2nd. Tell everyone to subscribe. You know the deal. We still got the most rational community in the entire crypto space. Feel welcome to stay. Feel welcome to say hi. Feel welcome to cancel as needed. Main channel is always free, so we're always happy to help out anyone that needs some assistance. I wish you all a wonderful day. I'll probably catch you guys on a Thursday for a very strange week, but we'll do the best we can. I'll see you then. Peace.